Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 15th of August, 2023. It is damp and cool and muggy here in Chicago today, another rainy day. Thanks for joining me as we seek shelter in our little offices and trade workstations. This is episode number 2516. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to start out today philosophically here. A quote that I read in one of my books that I noted down back in 2004, I think. It's this quote from Seneca. No wind favors a ship without direction. No wind favors a ship without direction. So it doesn't matter what direction the wind is blowing. It doesn't favor anybody if you don't have a direction that you're wanting to go. So, in other words, don't go trading without a plan. Make sure you have some purpose and direction to what you're doing on a day-to-day basis. As you come in, take advantage of every single day that you have an opportunity where you have an opportunity to trade or to learn about yourself or the markets. Make sure there's direction so that hopefully the wind can favor it. Here's the convergent trading pre-market summary sheet. We have a market that's in a risk-off sentiment, which is very, very interesting this morning. Given the way we closed quite bullish yesterday in the U.S. equities, but the punches keep coming out of China as the Chinese industrial production retail sales lower than expected. Unemployment is higher. And a key headline is that the Chinese government's going to stop reporting youth unemployment, which is at historical record levels. And so there are some really structural issues with China, and they're not likely to be fixed through typical stimulus measures, and that is rattling the market a little bit. Japanese industrial production is higher than expected. UK unemployment rate higher than expected. The German zoo economic sentiment higher than expected. Current conditions lower. Canadian inflation came in higher than expected. U.S. retail sales ex autos doubled its expected value. Pretty strong number there. We saw a little pop on that number, but the Empire manufacturing missed by quite a bit. Was expected at -1, came in at -19, I think, something like that. China's PBOC, the central bank, unexpectedly cut rates to support struggling economy. Didn't really do much for the markets. So the market's quite bearish on China right now. The dollar has been climbing pretty well. The dollar's around 103 right now, the dollar index. Russia's CBR imposes emergency 350 basis point rate hike to 12%. 12% as that country's currency continues to collapse. UK wages rising at a record rate. Fitch warns it might have to downgrade dozens of U.S. banks, including J.P. Morgan. Saudi Arabia and the UAE reportedly buying up NVIDIA shares, chips for AI. A lot going on, a lot on deck in the in that part of our pre-market summary sheet today. There's just a lot of news coming through. What's left for today? What's on deck? We have the NAHB housing market index for August at 10. That usually isn't much of a mover. We're expecting 56 there. The prior's 56. Business inventories, not expecting much of a move there, expecting 0.1, prior 0.2. Fed's Kashkari at 11, and then the API crude oil stock change after the close at 4:30. And remember, tomorrow we get the inflation rate out of Great Britain in the morning, right at the European Open. Looking at the S&P has a multi-distribution profile overnight. We look at that here for a second. Very much a clear double distribution with a trend down. The market balanced on the upper end of the range, and then blew right through on right on the European Open, and fell right through and has been balancing since. So it's been quite a ride for the session here, really reversing yesterday's action. 264,000 contracts have traded. This is a pretty strong volume today, so we have pretty good activity. 40%, 47% inventory is short. 47%, 47% of the volume occurred below the prior close, so the inventory is short by 47%, and the range is 47.75 points. That is more than one standard deviation over the last 252 days or 252 sessions at this time of the day. So we have an outstanding range for the session. The point of control at 44.80, shifting down from about 45.12, and the low at 44.70. So if you recall, yesterday's low was 44.69. Today, the overnight session low is 44.70. So we really reversed yesterday's action pretty well. Here's what the charts look like. Let's take a look at what we did overall. So I talked about how we were in balance up here for a while, before I left on vacation. The Thursday that I left, or the Wednesday or the Thursday that I left, the market sold off and moved into a secondary balance, which is this box that you see in front of you here. And we've been trading in this box, which has been a range of about 45, 55-ish to about 44, 65-ish. We're at the low end of that range right here. And yesterday, Friday opened and it created balance, but it pushed back into, even though it gapped down, it was responsive, it pushed back into that box. And then yesterday, what we talked about for the S&P before looking at the NASDAQ was, hey, we're opening in range in value of Friday's range, and it looks like it is very likely to challenge the 83 and then the double TPO high at 93, and potentially push to 45.02 for the overnight stat, which it did. That's exactly what it did yesterday. It did it in a very kind of methodical, calculated way. And we ended up finishing, you see the finish there, right at the high on the RTH session. And so what we had was a bit of a reversal back into the range. We understand that this whole area is considered balanced again all the way up to about 45.55, 45.60 or so. We understand that this is a balance range, so we're very likely to see kind of two-way action. But what we did overnight is completely take that back. We ended up pushing to 45.17, 45.17. I talked about this 45.20 to 23 area yesterday. There's another chart I'll show you which has a resistance line up here. We got to 45.17, 18 overnight, and then we sold off pretty strong and then held the low end of the range. We missed the low of yesterday by a point overnight, and so we're holding steady below yesterday's value. We're holding below the MC point of control of this region right here, which is right down there at 44.90, and it looks pretty bearish. So it's really important, because this is on news. We have the news effect, the SOC effect is what I would call it. And so this morning we have to see whether the news effect gets taken back or gets canceled. But there's quite a bit overhead that buyers have to kind of get through. Again, the 44.93, which ended up being the TPO POC and the VPOC, the volume POC, against this double TPO high, which is against this low from Friday a week ago, or so. After the sell-off, we had this low in this area, which we tested from below with a double TPO. Now we have this acceptance in this area, and we have the MC point of control for this region at 44.90. So what we have is essentially 44.90 to 93 acting as the dividing line, but once you get through that, you still have to deal with the 45.02, which is a kind of an even bigger line in the sand, or an over-under line. So 90 to 93 is likely to act like a magnet, where it might trap. If we move in there into that price area, it's likely to trap price in there, whereas 45.02 is likely to really tilt the action towards the bias towards buyers or sellers. Currently, it's favoring sellers. So that's the bigger picture. That's what we've done. We've really put in a higher low, higher high. So the one-time framing down is non-existent. The one-time framing up has not been established yet. If we keep yesterday's low intact, we might start establishing one-time framing up. If we keep a higher low today, then I'm going to be looking for yesterday's high to be taken out. I want you to look at this chart, which I've watched all day long. Very important chart to show me the rotations. Look at how this thing finished. We finished pretty strong. Okay, this occurred in the last bracket. Okay, and this really is an indication that the market was quite bullish. We pushed through the 4,500 and just ripped up 45.02 right in here, and you could see M period came in pretty deep from all the way down here and crossed all the way from the point of control to finish at highs, and we finished just a tick below the high of day with settlement of 45.06. This is quite a bullish close. I would expect that if I had a long from somewhere down below, I would expect to see more favorable excursion for that long into the overnight session. Look at those rotations. We also left some single prints from yesterday, weaker structure, which we're in the middle of. So we have these single prints right here from 44.78, let's call it 79, 44.79 to 44.83, if you recall the 83 yesterday from the overnight session. So we're opening in this kind of a weak structure against the prior acceptance from Friday's balance acceptance. This is likely to be a pretty turbulent open, is what this is indicating. Overall, the market finished really strong. Same with the NQ. If you look at the NQ, big dots. As the market pushed higher, we had pretty strong collisions on the way up, and the NQ ended up pushing even higher. The NQ pushed all the way up to 15,335 overnight, which puts us against this key resistance band that we have in our stock zones and our CT stock zones, and came all the way back through settlement to find itself right in the middle of balance. The NQ, yesterday's point of control, TPO point of control, in line with what we had last Thursday. So what we've done in the NQ is we've reacquired Thursday's value and traded within it with a pretty strong close, and now we're a little bit lower. So the NQ is actually in a better position than the ES. The ES is. The NQ also has a string of singles here. The NQ looks relatively bullish against the ES, and so that's going to create further turbulence on the open. So these are kind of the big picture pieces that I'm looking at when we look at what's happening overall. So let's look at this. You see the NQ has this negative skew here. It's got a channel going to the downside. It pushed up against the upper end of the channel, but it's holding yesterday's value, whereas the ES is way below here. So I'm going to probably sit out the first 15, 20 minutes, maybe even the first bracket, and see how the second bracket extends beyond the first bracket to get a better picture. I would like to get in as early as possible, given that we had a P-shaped profile with a strong close. The NQ seems to be poised to re-challenge yesterday's high and to squeeze. Yesterday's high was 73.50. This 273.50. It seems poised to do that, and it's very, very likely to give us a gap to settle trade. So the NQ to me looks a lot more favorable as an opening trade than the ES is, because the ES is in a more is in a much weaker form than the NQ is. So the ES will have to get bullish. The ES will have to open, probably test these singles, fill in the singles somewhat entirely or partially, and then it has to get through 90 to 93. So this is what we have to watch out for. These are the numbers you need to remember for the open. It has to get through the 90 to 93. Once it gets through the 90 to 93, it becomes a gap to settle trade. We're looking for a pullback in the range of that 90 to 93 area. Pretty tight stop, looking for 45.06, and then boom, we're now looking for 45.07 to be taken, and then that opens up the overnight stat at 45.17. So that gives us a trade with about 3.5 points or 3 points of risk from 90, call it 95, let's say, with about 12 points of target with scale outs, giving us a 2.2, 2.4 R trade as a key trade to the upside. That's if the ES manages to get through the 90 to 93 and starts to squeeze through the 4,500. Then it gets into line with the NQ, which is quite a bit more bullish. Okay, if the NQ gives up the 15,200, especially if it gives up that, if it gives up this area right here, if the NQ manages to fall below yesterday's value, excuse me, fall below yesterday's value and give up Friday's high, it is very likely to drop pretty quickly through the weak structure below, fill in the singles, and then the S&P will likely support that move lower into 44.24 so in the S&P, and then here we're looking at 15,000 retest from a couple of days ago. So that's how things are shaping up. Okay, for crude, I didn't cover crude yesterday. Crude continues to one time frame down. Boom, boom, boom. Crude seems to have found its sellers. We do not have a good excess high in crude, like it's not good structure. But what crude is doing is it's taking back this weak structure that we left behind from last week on the strong pop higher on a gap. Lots of single prints getting filled, single print areas getting filled from yesterday and so on. So yesterday we opened in a gap, pushed back into value, and then ended up settling below the prior 2 days lows. This is an important indication that its buyers are still interested, but they're not able to hold territory. This morning we have another gap and responsive. It's pushing back into the prior range. As long as it stays below this value area here and starts to turn over, we would be looking short back into the towards the open in crude, and crude looks to target this weak low down at 80.34, probably 80. So crude overall short term looks to be trending to the downside. The big picture in crude, of course, if you're a big swing trader or whatever, is bullish. I mean, we've moved up from much, much lower prices to push through to 84.50 or 84.60 or whatever it is, 84.65 or so. So that's crude for you. I don't have much else to offer in terms of what's going on. The relative delta indication on the open has been quite interesting. Yesterday was very, very weak. Remember, I talked about this. I said this is quite a weak delta. We're below VWAP. And it's likely to struggle to push higher, and it opened and it immediately pushed higher. I looked for shorts early, but the long was obvious. The open was below us. The day level, the day generated levels were below us, and it was just a matter of buying a pullback, and that was the trade. This morning, we have been flat to European Open, very negative after the European Open, but we've just crossed a positive territory here. We still remain below VWAP. It looks like it wants to take back some of the sell-off this morning. The delta supporting that. Same in the NQ. So with that, we still have kind of conflicting inputs. So I'm going to wait to see how well the ES responds to 44.90, 93. As discussed, we're going to look for how it challenges those levels. 90.93, this green zone here. And then from there, if it's able to take the 90.93, then we're looking for a settlement. And then the overnight stat at 45.17. That'll be the key trade. If it's not able to do that, then we're looking for it to roll over into 44.76 or so, and then challenge yesterday's low at 44.69, and then start to push lower into last week's low at 44.59, and so on and so forth. But right now, it just looks, it's tilting to the bullish side. Let me know if this is confusing to you. This is really about reading the auction and the rotations and how well each bar is lining up with the prior, how well the auction's progressing, and then reading that narrative and then projecting what prices on our price map we're likely to target if it pushes higher or if it pushes lower. I'm not here to predict if it'll push higher or lower. That's not my goal. My goal is to be prepared for whatever happens and to be able to have a plan so I can hold on to the trade to its full value, because all of this is pointless if we're risking 3 points, and then every time we have a 1.5 points of profit, we're so nervous we take the trade off when it hasn't accomplished anything. So having understanding the narrative, understanding your price map is really supremely important in helping you, most people, deal with the biggest problem, which is, why do I hold on to my losers for so long? And then whenever I put on a trade that's for my plan, I'm taking profits off because I'm looking at my P&L and I can't hang on. The whole effort, this is going to be your biggest demon, and the whole effort is to counter that. Okay, make sure you hit the like button. Make sure you subscribe to the channel. If you're not subscribing to the YouTube channel, costs you nothing. Good luck.